Elon Musk just merged his two most valuable private companies, SpaceX and xAI, at a combined valuation of $1.25 trillion. No press conference, no investor call, just a blog post. So why merge now? And why is Elon making this move in the first place? We're covering the announcement, the financial reality that made this deal make sense, the vision Musk is betting on, and why this is all happening now. This is Boardroom Wire. Let's jump into it. On February 2nd, 2026, Public Records in Nevada confirmed what Musk's blog post had announced. SpaceX is now the managing member of xAI Holdings. Musk framed it as building the most ambitious vertically integrated innovation engine on and off Earth. AI, rockets, Starlink, and X all under one roof. And they're already planning an IPO. Bloomberg reported a target valuation of $1.5 trillion that could help the firm raise up to $50 billion in a single public offering. If it happens, it would be one of the largest IPOs in history, second only to Saudi Aramco. The timing is interesting because multiple reports suggest the IPO could land in June, potentially around Musk's 55th birthday, and Polymarket has a 74% chance it closes above a $1 trillion market cap if it happens. But to understand why this deal happened, you need to understand the financial reality of both companies. And the numbers tell two very different stories. So when you look at this deal, you need to recognize the difference between xAI and SpaceX's financial position, respectively. xAI is a cash-burning machine. They've raised $22 billion to date. They're currently burning about $1 billion a month. Their revenue is sitting at maybe $500 million annually, and they're spending even more in the coming months. They recently built the Colossus supercomputer, which they bought 200,000 GPUs to power. They ordered another $18 billion in chips from NVIDIA recently, and they have massive ambitions, but the cash runway is just not there. SpaceX, on the other hand, is the pinnacle of financial health. They have $15 billion in revenue last year, with $8 billion in profit, putting them at roughly a 50% margin. Starlink alone has 8.5 million subscribers and owns 2/3 of every single satellite in orbit. The valuation of SpaceX as of December was $800 billion. Again, putting them in an exceptionally strong financial position. So one company is burning money faster than maybe anyone in history, and the other is a money printer that's ripe for an IPO. When you put them together, the financial logic makes a little bit more sense, but the idea isn't for xAI to just benefit from SpaceX balance sheet. There's a lot more going on here, especially when you think about what Musk is actually planning to build. 3 days before the merger was announced, SpaceX filed with the FCC to launch up to 1 million satellites into orbit. Not for internet, but for AI compute. They want to launch and create orbital data centers. Musk's pitch is that terrestrial data centers can't scale. There's too much power, too much cooling, and too much community pushback. Space has continuous solar and no neighbors to worry about. His quote was, "Within 2 to 3 years, the lowest cost way to generate AI compute will be in space." The target is 100 gigawatts of compute annually in space. For context, that's more than the entire US economy uses in electricity. Now, is it realistic? Jensen Huang has his doubts. Cosmic radiation fries chips, as an example. Cooling in space isn't simple. 1 million satellites risks Kessler syndrome, which is basically debris that makes orbit unusable. But whether the space vision works or not, the deal still makes sense. Here's why. The timing here isn't random. 3 things converged at once. First, xAI's cash problem. $1 billion a month is brutal. Even with $22 billion raised, that runway disappears fast. Another venture round at these valuations is hard to pull off. Merging with SpaceX gives xAI access to $8 billion in annual profit from the SpaceX business with no dilution to new investors and no fundraising roadshow. Second, the IPO window. SpaceX has been planning to go public for a while now, but Rocket Company gets one valuation. AI integrated space infrastructure platform gets a very different one. Adding XAI to the story right before an IPO isn't accidental. Analyst Tim Farrar put it bluntly. Investors' appetite for AI could cool in 6 to 12 months. Musk is locking in the narrative while the window is open. Now, third is the competitive positioning. NVIDIA bought Grok for $20 billion last month. Google, Amazon, and Microsoft have all been building their own custom silicon to reduce NVIDIA dependency. XAI is one of the last major independent AI infrastructure plays, and now it's off the board. Anyone who wanted to acquire with or partner with XAI, that option is now off the table. So all of this makes sense, but there's one more thread that's worth watching for as it relates to Musk and his companies. Dan Ives at Wedbush has been saying for months that there's a growing chance Tesla eventually folds into this structure too. Think about what that would mean. Tesla's autonomous driving runs on AI. Their Optimus robot runs on AI. They've invested $2 billion directly into XAI, and Musk has talked publicly about Tesla's Dojo supercomputer and XAI's Colossus potential of working together. If Tesla merges in, you're not looking at a company anymore. You're looking at a platform, the most advanced technology platform ever created. AI, rockets, satellites, EVs, robotics, and social media vertically integrated from the chip all the way up to orbit. Now, there's no confirmation this is happening. Tesla is publicly traded, which makes a merger far more complicated. But the pieces are lining up in a way that's hard to ignore, and it's definitely something that we need to watch out for. So here's the bottom line. Musk merged his cash-burning AI company with the cash-printing rocket company. The stated vision is space-based compute. The immediate logic is financial, but the longer-term vision is much more robust than that. This has the opportunity to really juice the IPO narrative should they actually choose to IPO this summer and consolidate before competition can actually react. Whether orbital data centers happen is a question for 2028. Whether Tesla joins the empire, that might be a 2026 story. If you enjoyed this video, please like and subscribe. It means a lot to the channel. With that, I'm going to wrap things up. I'm Boardroom Wire. See you on the next one.